officer sales training with the mortgage calculator. We'll get started here in just a few minutes. In the meantime, I put the chat up on the screen. Today, we're going to be going through how to prospect for second mortgages. So we'll get into that here shortly. Just waiting a couple minutes to go live on all the different platforms, but thank you for those that are tuning in nice and early. Remember, we do this 12 p.m. Eastern every weekday where we go through more of the sales training and the front end of dealing with leads and prospecting for different loan types as opposed to the more back end guideline side of things. Today, we're going to go through a little bit of just what these loans are, and we'll also talk about how we can prospect for those type of loans. With that being said, it looks like we are live on all the different platforms, so we can go ahead and get started here. So let me pull up our topic here. So today's sales training is going to be prospecting on second mortgages. Now, I also have, we're also going to talk about HELOCs a little bit as well, but the main point of this is to be talking about second mortgages. So this is essentially one of the hottest products right now because of the way that rates are. This is becoming a popular product more and more as time goes on. So let's talk about it here. When we're doing a second mortgage, remember the first mortgage rate stays the same. Now, that is why it's so popular right now, right? Because after the cycle we went through, most people have a very low rate on their home. Almost everybody took advantage of the lowest rates in, history, right? A couple of years ago. But now that rates are much higher, when people are looking to get cash out of their home, the second mortgage is typically the best option because it leaves that first mortgage rate the same. So remember, when we're talking about second mortgages, we're not talking about originating the first and the second. We're not talking about originating the first and a HELOC. We're talking about only originating the actual second mortgage. We don't touch that first mortgage. That's something that some newer loan officers were confused about that talked to me about this. They were thinking we redo the first loan and then put like a second loan on it. Remember, we're not touching their first mortgage when we're doing the second mortgages, right? Now, that's why it is a great alternative to cash out refinances. Why is that? Because we're going to keep their same low rate. And instead of refinancing it to do a cash out and then getting a worse rate on the entire loan, we're going to keep that first loan low rate, and we're going to use the second mortgage to get them the money that they're looking to get. Now, that is where the blended rate comes in. And we did a training on this. We did our loan officer training series on this actually last week. So definitely go check that out on our YouTube channel where Jose goes into how to figure out the blended rate and how all of that works. But you're essentially taking both rates, and there's a formula where you're going to blend them together and find the essentially effective rate of what their entire mortgage obligations would be after you set them up with a second mortgage, right? Because they have the low rate of the first and then a high rate of the second, because second mortgages are going to naturally be higher rates. And that way there's a formula to figure out the blended rate, which is what they're looking at for their entire mortgage obligation at that point after they get the second mortgage. So again, we have a training on how to do all of that, but just know that this is so popular right now because of the way that rates are and because it's the best alternative to a cash out refinance. Now, remember, as loan officers, we only get paid on the loan that we originate, the loan amount. So remember, a lot of these loans are going to be small for us as the loan officer because we might only be doing $100,000 second mortgage, right? So, small loan amounts typically because we're just working with whatever equity they have built up in their home. Because again, we're not refinancing that first mortgage. Now, how are we going to prospect for these? The same way we would prospect for a cash out refinance. We're prospecting for people who essentially, need cash. So, whatever way we can go about doing that, we want to make sure that we let people know this is a great way to get cash out of their home. A lot of people don't know that they could do this and assume that if they were to do a refinance right now, they would be taking their very low rate that they got and raising the rate a bunch just to get cash out of their home. They may think that the only alternative is a HELOC, a home equity line of credit. Now, there's a big difference between a second mortgage and a HELOC, right? A second mortgage is a fixed rate mortgage, typically 30-year fixed rate mortgage as a second mortgage. Now, a HELOC is going to be a variable rate. So it's going to be a lot different. Now, there are advantages to the HELOC depending on what your client is looking to do. For example, the HELOC, you're only going to pay interest on what you've drawn, right? And so depending on what the person is looking to do with these funds, if it's something more short term where they're going to put the money back in and they don't have to keep it all drawn at the same time, then a HELOC may be a better alternative for them. And we can originate HELOCs as well at the mortgage calculator. We can originate standalone HELOCs. We don't do much of the standalone HELOCs, but we can originate a second mortgage and a standalone HELOC, no problem. So it really depends on what your client wants to do. And you as the mortgage consultant need to be there to let them know, hey, you're trying to get some money, right? You need cash and you have equity in your home. So which one of these is going to be the best, way for them to get that equity out of their home? Is it a second mortgage where it's a fixed rate and you can come up with their blended rate? Again, a way for you to be a mortgage consultant and let them know, instead of just saying, hey, which one do you want to do? You're going to educate them on which one would work better for whatever situation they are planning. We're going to let them make the choice, but we're going to educate them on the pros and cons of whether they may want to do a second mortgage and what their blended rate would be, or if they may want to do a HELOC and what the rate would be on that, the starting rate, because of course it's an open-ended, variable rate as a HELOC. So of course we can let them know the starting rate, but nobody exactly knows where that variable rate is going to go in the future. So as far as looking for clients, we're looking for people who are looking to take advantage of their equity in their home, whether it's with a second mortgage or a HELOC. If they need cash, we're going to be there to assist them with that. So a big part of this is whatever person you're talking to, whether it be a regular consumer or it could be a investor as well. Now, let me go back a little bit here and talk about the second mortgages. Now, as a HELOC, it's typically or always going to be full doc. You're going to need income verification, actual full doc loan, tax returns, and all that kind of stuff. But the great thing about a second mortgage is that we can do them with different income alternatives like our non-QM programs of a bank statement program or a profit and loss program. And we can also do the second mortgages on investment properties, which is not really possible with a HELOC. So again, those are other circumstances that are going to determine what you can do and consult your client on. So if you're talking to an investor, then obviously you're going to only be talking to them about a second mortgage. And one of the benefits of that is telling them that on the second mortgage, we can do this alternative income, because most investors don't have a regular, W-2, and don't have, I guess, not good tax returns, but they typically have tax returns where they're either losing money or not making money, because that's kind of the point, right, of taking advantage of all the tax loopholes, or whatever the tax code. So typically the investors we work with, and investors in general, real estate investors, are a lot of times not going to have typical jobs, W-2s, tax returns that would be good to do a loan with. So when you're talking to investors, this is a great way to say, hey, you could get cash out of your property, and we can then go use that to purchase more homes or whatever it is that they want to do. So investors are a great client for this. If they have investment properties, they can get some cash out of them. You can explain to them the blended rate. They can make an informed decision on what they would like to do with their investment properties. And this is also for regular, everyday people that may just need alternative income, and it could be on their primary residence, but they may not be able to qualify for the full documentation needed for a HELOC. Now, the typical person at this point is going to think they're out of gas. If they can't get a HELOC, that's typically all people really know. They, especially primary homeowners, they're not out there every day in the real estate market looking around, knowing what can happen. When you want cash out of your home without refinancing, the only thing people think about is a HELOC, a home equity line of credit. That's the first thing that comes into mind. So we can really educate people on the other options that they have. Now, if you are talking to somebody and they need cash out of their home, and you're explaining both ways they could do it, a HELOC or a second mortgage, part of that conversation is obviously going to be, what is your income like? What is your income type? That's the next thing that you're going to talk about in the conversation, because that's going to determine whether you're splitting off into a second mortgage or you're still on the route of being able to do either one, right? But when they tell you they have some type of alternative income, you already know where you're going with it. We're going to be looking at the second mortgages. So that's a big thing that you need to ask your clients when you're speaking to them, or whatever prospect or lead that you're speaking to. It's one of the first questions is, well, what is your income like? And, do you write off a lot of things on your tax returns? These are all things that are going to affect them getting a HELOC. So those would be the things that would let us know that we should probably start going down the path of a second mortgage. Now, just like a few of the loan types that we do, a second mortgage could give you a loan that you never would have had. And what I mean by that is, when you're talking to your investor clients, maybe they're doing a DSCR purchase like we do so many of here at the Mortgage Calculator. You can let them know typically they have other properties. And if they know about this second mortgage product, this fixed rate second mortgage that they can use with alternative income, that they can use for investment properties, that may open up a wide array of possibilities to them, of them saying, you know what, cool, I could get a second mortgage on this. I could take that money and go buy another investment property with a DSCR loan, or whatever kind of loan they're looking to do. 99% of the time, that's going to be a DSCR loan, especially the live rates show we did today. The DSCR is actually lower rate than a full doc conventional investment property, which is just amazing. So now you're creating loans. You're creating that second mortgage which your investor client may not have been considering in the first place. You educated them on this. Now they might do the second mortgage with you. But then guess what? You're also getting half the time when an investor is going to get cash out of something, half the time they're going to go buy something else. So you're going to get that loan as well. So here we go. You have your client that you're working with or about to work with. You didn't, maybe you did one loan with them, or about to do a loan with them for a purchase or whatever it may be. Well, guess what? Just by educating them on the second mortgages, you may be able to get two more loans or three more loans out of that because you can educate them on the second mortgage, originate the second mortgage for them, and then half the time they're going to take that money from the second mortgage and go put a down payment on something else, typically with a DSCR loan. So now you created not only the second mortgage, but another purchase out of nothing, as far as just educating your client that this is an option. So while a lot of people are going to do a second mortgage on their primary residence, here at the Mortgage Calculator, we work with so many investor clients. Don't forget that opportunity. When you're talking to your client, they may be talking to you about something completely different. You may be already working with them on a loan. Maybe it's a DSCR loan or something else. Don't forget, especially with those investors, to let them know, hey, we have this available. And if you would like, I could do an analysis for you and give you a blended rate, because an investor wants to see that, right? An investor would love to see that, breakdown of, okay, well, I could get some money out of this, but what's the real cost of me getting that money? What does real estate investing break down to when you're getting loans is, what is the cost of this money so that I can go purchase this home? And is that cost of this money going to be outweighed by the opportunity of the real estate, by the rent or by the flip if they're planning to sell it, whatever the case may be, right? So again, that's huge. Just educating even the clients that you already have. Even, you may have closed some DSCR loans with somebody already. This is a perfect opportunity for this training to spark that in you to say, you know what, I'm going to go contact my previous clients and let them know about this program. And these are relatively new, so it would be a good thing to tell them, hey, just want to let you know we have this new product. It's available for investment properties. It's available with alternative income, either whether you need cash out just to have cash or you want to get cash out to buy another property. This is here. It's something that you could take advantage of. That's not being pushy onto your clients. That's not being salesy. That's just letting them know, just want to let you know, we have this option here, and gonna, put it in their head. Sometimes that might, again, just let them start thinking, let their mind start going and say, you know what? I did see that property, or maybe I want to get another property. I would love to add one to my portfolio. So don't forget to talk to this with your investor clients, and don't be afraid to contact anyone that is, you've already done deals with. Also, don't be afraid to contact people that you may have been talking to about a cash out refinance and let them know, hey, there's new programs where instead of doing a cash out refinance and getting a higher rate when the rates are high, we have this alternative. So even a primary residence cash out, essentially anybody you've been talking to about a cash out loan, make sure that they know this product exists and make sure that they understand how it works, and make sure to do your work and your due diligence of giving them the blended rate. It's actually really easy to do at blendedrate.com. You can put their old rate and put their new rate, and it'll do the rate on the second mortgage and the rate on the first mortgage and the amounts of each mortgage, and it will do that calculation for you. Again, Jose, on our previous second mortgage training that we did, which you can go watch on our YouTube channel, Jose does it manually, so you can see exactly how it works and the breakdown of how it works on the back end. But blendedrate.com is something that will do it automatically for you. So when you're talking to these clients, make sure you let them know, hey, I could actually do an example for you of what this would look like to give you your essentially effective rate after we combine the second mortgage with the first. And again, investors are going to love that. They want to see the details. They want to see, exactly what the cost of them getting this money. I see a question here. If they got a second mortgage on an investment property with the DSCR, would the rent has to be raised on the property? Well, it would be the total amount. So the CLTV is what you would be working with at that point. right? So, whatever DSCR you would need to pass that, to get to that CLTV where it would make sense. So, it's still going to, now it's at a higher LTV. So, of course, the payment's going to be larger, and then the rent would need to cover that payment, right? So, it's all going to be relative. So, if you were doing a second mortgage, remember that, you'd have to have, like, so if you're doing a second mortgage on a DSCR property or something, you'd probably have to have, you'd be at 60% LTV or something, and then be, getting a second mortgage on top of that to bring you to 80, 85, 90 CLTV or whatever the program may allow. There's all kinds of programs with all kinds of different LTVs that you can quote. And you can quote these, for those of you at the mortgage calculator, you can quote these right in our system as well. If you go into the Knowledge Center, there's a video of Nick showing you exactly how to quote a second mortgage and how to quote a HELOC as well. Now, the HELOC is going to be different. You're not going to do a blended rate with the HELOC, right? That's going to, again, make sure you educate your client on this is how a HELOC works. If you're planning on not taking all the money out right away, a HELOC may be better for you because you're only paying interest on the money that you take out. But when you do a second mortgage, you're paying, principal and interest down, right? It's a fixed rate second mortgage. Now, when you're doing a HELOC, you're paying interest only, variable rate interest only on whatever money you take out. So make sure you educate yourself and your clients on the differences between a second mortgage and a HELOC. Make sure everybody understands. Let's see here. Why would an investor opt for a HE loan instead of a HELOC? Well, just like I said here, it's going to depend on what they're going to do, right? So what I just explained there is going to, determine that. Now, a HELOC is going to be on their primary residence, right? So if you have an investor to get a HELOC, that's going to be a full doc loan on their primary home, as opposed to a second mortgage could be on an investment property, right? So that's going to be one of the big differences. All right. I don't see any other questions here. My challenge to all of you today is to go back and make sure that anybody you've been talking to about a cash out refinance, or anybody that you have done investment property deals with, and you want to make sure to let them know and educate them on this. And again, you can just contact them to let them know you're touching base. You're not harassing people. You're just saying, hey, we have this new program that rolled out. And again, it's pretty new. These are pretty new. We have these new programs we've rolled out. Great opportunities here. I just wanted to make sure that I let you know about it. I thought of you when we rolled out these programs. I thought of you, so I wanted to make sure. That's a great way to approach it, right? I thought of you. I'm thinking about you, right? So I thought of you when I heard about these programs. It might be something you wanted to take advantage of. I just wanted to educate you on what this is and how it works. And just let me know if you think it's something you would like to use in the future. So that's my challenge to everybody today. Go back, people you were talking to about cash outs, make sure they know about this. People that you've had, clients that have purchased investment properties, make sure they know about this. That way you can help them. If they don't know about it, then they're never going to take advantage of it. So it's our job to make sure that they know about these opportunities. And again, you can create multiple deals out of this. A second mortgage is an amazing way to get your investors cash out for them to be able to go buy more properties, and hopefully they're buying those more properties with loans from you. All right. Remember, we do this 12 p.m. Eastern every single weekday. We're going to be back here tomorrow talking about reverse mortgages and prospecting for reverse mortgages. So I know a lot of you probably have questions on them because it's they're very unique and somewhat complicated product. So make sure you tune in tomorrow, 12 p.m. Eastern, for the next episode of the Loan Officer Sales Training with the Mortgage Calculator. Have a great day, everyone.